everybody. Today I'm going to answer a couple of questions that we've had on the market in general, but more specifically the tech stocks. We've had a roller coaster ride for the entire year, and a very surprising comeback from a very surprising crash that we had earlier in the year. And many clients are asking us, well, what now? What do we do about some of these stocks that are hitting all-time highs in spite of all the bad news and potentially bad economic news coming up? The way we look at it, we own a lot of the giant tech stocks, but we've seen this kind of game before where the tech stocks make a huge run and the companies are great companies and it doesn't matter because the prices are too high. So that's kind of the bear's main argument is, hey, the prices are getting to very, very elevated levels. Perhaps not as much as the 2000 dot-com craze, but pretty high. So, and then the bulls will come back and say, yes, but the trends, the technology trends that are at the backs, the wind at the backs of all these tech giants, those things are going to continue for at least, probably the next decade. You've got artificial intelligence, you've got big data, you've got driverless cars, you've got a lot of amazing things coming out, and the big tech giants basically own this space. I've even seen where some of these companies have been gobbling up smaller companies. They don't even care about the company per se, they just want the engineers and the software people. They can't find enough talented people in the technology field. So it's just booming and the trends are headed their way. And then the bears will say something to the tune of, yeah, that's true, but remember in 2000, the trends were definitely in favor of these tech companies, and yet they still got smashed 60, 70, 80%. And the NASDAQ, you didn't get your money back in the NASDAQ for something like 16 years. So the trends can be on your side and you can still get beat up if you pay the wrong price. So this kind of goes back and forth. And the bullish side says, yeah, but this time these companies are so profitable. They have no debt, basically, lots of cash in the bank, great free cash flow. They don't really even have any competition. And then the bears will say, well, yeah, that's a good reason for an antitrust lawsuit. They're too powerful. They're too big. In some cases, you could say they're more powerful than the government itself. So this goes back and forth. That's kind of where we find ourselves, trying to think of where do we go from here. And my main worry is that the tech stocks have kind of become the market. If you look at just the top 5 companies in the S&P 500, they're all tech. And just those 5 companies represent almost a quarter of the entire market cap. So they've become the market. They move it up or down depending on what they're doing. So that usually doesn't bode well for the next decade. But again, our contention is that we are trimming some of these things. We still want to own them. They are great companies, but we have to be realistic. And as they keep getting higher and higher, we just take more and more money off the table up from those positions and redeploy into things that are not that high. There's plenty of tech stocks that are cheap. There are many tech stocks that are really in a bubble. I would say that the big techs, the giants, are probably not in a bubble. You can make a pretty good rationale for why they are, I won't say worth the price, but they're worth hanging on to some of them for the next decade, and good reasons. But some of the stuff is just getting very frothy right now. So that's kind of where we are. We're worried about one other thing. The Federal Reserve has been printing a lot of money to get us out of this problem. They're running out of ammunition a little bit, so they need to pass the buck over to I hate to say it, but the politicians. They have to pass the baton, is probably a better way to say it. And the politicians have to take that and do something on the fiscal side. Monetary has kind of run its course, although people say, the Fed can just come in and buy stocks if they want. But at some point, Washington is going to have to do something like an infrastructure plan. And if they do that, that could bolster some growth. That could push interest rates up at a time when, our country's borrowed so much money. The combination of borrowing a lot of money and spending on infrastructure has a tendency to push inflation up. If that happens and there's growth, and growth isn't so rare in this country, then maybe the tech stocks, which they're very rare. They're the few companies that can grow in this kind of environment. If that's not so rare anymore, probably the prices of those companies don't need to be so high. And that is, I would say, possibly the straw that breaks the back of some of these prices. Again, they're good companies, and we're going to hold them to some degree, but we're also going to be trimming them as they keep going up and taking some off the table.